Hey there, in this video we're going to cover Kadena and the coin KDA and why it is my favorite blockchain that I believe has the potential to be the 800-pound gorilla in the blockchain industry. So right now the coin is sitting at $1.58 with a market cap of 292 million. And if we look at previous price action, it was really quite undiscovered until last year. It was really late last year, around October. We actually started to talk about this in our private communities, right between $2 and $3. And we bought a lot of KDA. It skyrocketed all the way up to 24, actually went over $28 on some exchanges. And then subsequently, it has come right back down, all the way back down to $1.58. So in this review, we're going to cover the team, the technology, the utility, the backing, and the coin metrics, because I believe those things are the most important things when you're reviewing a project prior to you potentially investing in them. Realize this is not investment advice. I'm not a financial advisor. I'm just giving you a review of the project. And also understand that I mine this cryptocurrency, I own this cryptocurrency, so I'm probably a little bit biased, all right? First thing I always like to look at is the team, okay? So the founders, who actually founded the project. We've got Stuart Popejoy, which led JP Morgan's emerging blockchain group, and then Will Martino, which is the tech lead for the SEC's cryptocurrency steering committee, which I believe is important because I think we're going to see a lot of regulation. So I do like to see someone from a regulatory body that is a founder, because they're likely not going to create a coin that is going to be deemed as a security in the future. Okay, but together they actually created JP Morgan's first blockchain and the coin JPM coin. Now, this is something I even like more. Obviously, they're very accredited, founders right here, but also their advisors are extremely accredited. Dr. Stuart Haber is a co-inventor of blockchain and the most cited author in Satoshi Nakamoto's renowned 2008 Bitcoin white paper, which we'll talk about here in a second. So Stuart Popejoy, he's has very accredited. Like I said, he worked at JP Morgan. He's been involved in algorithmic trading. He's a very intelligent individual. Went to University of California, Berkeley. Okay, we've also got Will Martino. Once again, he worked for JP Morgan for just over a year. He was also working in the SEC for over 2 years, and then once again founded Kadena in 2016 with Stuart. Now, this is the guy that I was talking about, the cryptographer, Stuart Haber, that literally invented blockchain technology. So Satoshi Nakamoto, that invented Bitcoin, actually got the technology of the blockchain from Stuart Haber. And if we look at Bitcoin's white paper, you'll see, if we just search his name, Haber, he's right down here. He's cited 3 times. So Haber, right? So he literally is the most cited person in Bitcoin's white paper, and he is advising the Kadena project. And you'll see that he's a cryptocurrency consulting. He runs a cryptocurrency consulting group called Stuart Haber Crypto LLC, but you can see that he's not on a board of advisors of many projects. Okay, it's just Kadena, because obviously he believes in the project and believes in what they are doing, which is really important. I think that's super credible for Kadena to have that backing. Okay, so let's talk about the technology. I think this is also one of the most bullish things for Kadena, which is its use of its public blockchain, which is inspired by Bitcoin. Obviously, one of the pretty much inventors of blockchain, that then the most successful blockchain we've ever seen. Bitcoin came afterwards, is backing the project. This is what a typical blockchain looks like. So the consensus and verification is done from block to block, which you verify the transactions and they're hashed together, each block of transactions. So the problem is it can be somewhat secure on proof of work, but it's the scalability problem is a huge issue. Bitcoin only does 4 transactions per second. So what if you duplicated the chain and were able to have 2 chains communicating with each other? You could double the security and also double the throughput. Okay, this was some early discussions on some Bitcoin forums, and then the Kadena team realized this. Wow, if we duplicated 2 chains, what if we didn't just duplicate 2 chains? What if we actually duplicated into 10 different blockchains? So they released Kadena 10 different blockchains that are all hashed together. They communicate to 3 different They have formed consensus through 3 different nodes. And then they're like, well, what if we did 10 different chains? What if we actually did 20 different chains? So they then doubled the amount of chains. So now there's 20 different blockchains that have dramatically enhanced the throughput and security of the Kadena blockchain. So this is probably the most revolutionary technology I've seen in blockchain technology. A lot of other, blockchains are just, a sharded proof of stake blockchain. Kadena said, hey, well, all you guys are going proof of stake. We're actually going to go to proof of work because we think it's highly secure. Okay. But we also know how to make it scalable, which they were able to do. See, the problem with proof of work is it's not really scalable until now. So they actually patented this technology. And right now they have, like I said, 20 chains, which is an industry leading 480,000 transactions per second, which is far, far above what other chains do. If you know anything about blockchain technology, like I said, Bitcoin does about 4, Ethereum does about 12. Cardano does about 250. The most scalable chain right now that is actually functioning is like Solana at 65,000 transactions per second. And then there's a lot of other chains that are like, oh, we can do 100,000 transactions per second, but they're not currently doing that. They have to, upgrade the protocol and do a bunch of different things, and it's going to shard 1,000 times. And a lot of times these sharding proof of stake blockchains, every time it shards, it decreases it literally cuts the security in half. So it opens it up to hacks. And that is something that Kadena has figured out, is how do we, number one, run a proof of work blockchain that's highly secure. And then number two, how do we actually scale that? And they have figured that out, and they can pretty much infinitely scale that. So that was at 20 chains. Okay. 20 chains is 480,000 transactions per second. They can actually scale to over 50,000 chains. So you can imagine how much scalability they have on the Kadena blockchain, which is important because you want to be able to be scalable if you're actually going to have real world use cases. And you can see all of the 20 blockchains and how they operate and communicate right on the Kadena Block Explorer. You can see it starts from chain 0 all the way up to chain 19, making 20 chains right now. Okay. Another huge thing with the technology, which I didn't even realize this in my first video that I did when Kadena was like $3, is the packed smart contract coding and language. It is really, really powerful. So one of the most important things to understand about blockchain is really how these layer 1 protocols and ultimately the coin gets value is the adoption in the ecosystem inside of that blockchain. So you want to see a lot of developers building applications on top of the blockchain. If there's not developer activity and there's not people migrating and using that blockchain, ultimately that coin isn't going to have value. Okay, it could maybe be used just for straight speculation, but long-term, fundamental value, it's not going to have that, and it's not going to reach the market cap and ultimately the price that you probably want. That's probably why a lot of people invest into cryptocurrency, is because they can make a lot of money, but they don't realize these fundamental things. So the packed language is really, really powerful because it allows multiple things to happen, which we're going to speak about here in a second. But first of all, what is a smart contract? Okay, a smart contract is a computerized transaction protocol that executes the terms of a contract. The general objectives are to satisfy common contractual conditions such as payment terms, liens, confidentiality, and even enforcement. Minimize exceptions, both malicious and accidental, and minimize the need for trusted intermediaries. So it's literally a smart contract that can do practically anything. Okay. You could put, real estate transactions on there. You could be a bookie for, gambling purposes. You could create any type of a contract that you want between one party and another. It removes the central counterparty and reduces the counterparty risk. And it also allows things to operate more efficiently and more effectively because it'll be quicker and there's less fees. So smart contracts are one of the biggest things in blockchain. I think it's one of the things that you should really study and understand. And Kadena is infinitely scalable, and the packed software has made it extremely, extremely easy to actually create these smart contracts on Kadena's blockchain. So Ethereum writes their contracts on Solidity, and they have been exploited many, many times resulting in hundreds of millions of dollars lost in the DAO hack, the parity wallet, multi-sig bug. And the problem is these developers come on here and they create applications, and they ultimately write the code wrong, and they create bugs within the code. And then ultimately it leads to hacks and issues in the future. And what Kadena has done, it has made it an actual readable code. So a lot of times when you code in different blockchains like Solidity, or in different coding softwares and smart contract language like Solidity, no one can actually read it. And what I think is really important in the future is, unless you're like a really high tech developer, you're not going to be able to understand the code. But the packed smart contract language has made it extremely easy to actually be able to read. Even a normal person that doesn't have a ton of experience as a software engineer and as a coder can actually read the code to understand what it is actually doing, which I think is extremely important, because as we move to a decentralized economy, I really believe that more and more people are going to be creating their own applications. And the easier it is to create that application, the greater the ecosystem will grow, which means that leads to more adoption, which leads to likely the token price going up. Okay, so Kadena not only solves that, it's really easy. Okay, it also solves, like, it literally will correct an error when you're actually writing the code, which makes it easier for the actual developer. And it also reduces the amount of bugs that will happen within the smart contract, which will reduce the amount of hacks and issues in the future. Okay, so Kadena has pretty ridiculous technology. Smart contracts, they're safer, they're more scalable. You can make them in literally 1/10 of the time as something like Solidity. Okay, they even have come out with something where you can create no-cost transactions, where they call it a crypto gas station, which allows businesses to eliminate all transactions fees for their customers. I believe that they just select that on, like, when you create your own dApp, you can actually just choose to create this gas station where the customers don't actually have to pay for transaction fees. Also, as it scales, one of the big problems is, as blockchains scale, it creates a lot of use for energy, and Kadena has figured out a way to actually not increase the energy consumption even while scaling the transactions per second, or TPS. They have way higher security because it is a proof of work blockchain, and those 20 braided chains give it even more security than a typical blockchain. And then it is highly, highly scalable. It actually has industrial scalability, which if you actually go look, you'll see that it is the only chain that is capable of scaling to settle the 9 million plus trades executed on the NYSE each day. So those are the types of things that we're talking about. This isn't just like, one person like creating a DocuSign contract and a smart contract to go buy a computer. We're talking about potentially scaling to the point where we have, an entire stock exchange or crypto exchange operating on top of the Kadena blockchain. Okay, so that was the technology. Let's talk more about the utility of the coin. A lot of people never think, hey, what is this coin even being used for? Okay, KDA is a digital currency that is used to pay for compute on the Kadena public chain. Similar to ETH on Ethereum, KDA on Kadena is the manner by which miners are compensated for mining block rewards and making the network more secure, and is the transaction fee that users pay in order to have their transactions included in a block. All right, so really what it is, to summarize, is KDA is used as the gas fee for each transaction on the chain. So as the ecosystem continues to grow and the transactions continue to grow, the KDA coin is used more and more for the gas fees. Okay, also it's a native currency for the ecosystem. As more applications get built on the Kadena blockchain, the KDA coin will continue to get used more, and the native currency to settle value transfers within the ecosystem. Okay, so any type of value transfer inside of all the applications built inside of the Kadena ecosystem, KDA coin is likely to be used for all the value transfer and wealth transfer with inside of the ecosystem. So think of a layer 1 blockchain and the protocol as the new Amazon Web Services. So like on AWS, you can go build an application on top of AWS. Okay, it's the same thing with blockchain technology. Now, this is just a decentralized version. So instead of AWS controlling all of the computer nodes where it's highly centralized, okay, we've got Kadena and other layer 1 blockchains where they're decentralized, where there's a ton of node runners all around the world, which just reduces the counterparty risk. And as long as it's still scalable, it can have the really great benefits of centralized cloud computing services that you can actually go develop on, and couple the pros from that with also the pros of the decentralized network. Okay, so the backing is also incredibly important. I like to look at, okay, who is actually behind the project to understand, did they take a lot of money up front where now all the token supplies is highly centralized? Well, in Kadena's situation, they only took a funding round of about 15 million. They did 3 different funding rounds. And they've got quite a few different investors here, but not too many. And one of the most notable is Multicoin Capital. They've been known to invest in some of the most successful projects all around the world. This is a multi-billion-dollar fund, and Multicoin is highly reputable in the space and has invested in some of the most successful cryptocurrencies and projects around. Now let's talk about the coin metrics and look at what are the coin token allocations. 70% of all KDA tokens, which there will be a total of 1 billion KDA tokens released over the next 100 years. 70% of those are going to miners, okay? 20% goes to the platform, which we'll talk about here in a second. 7% goes to investors and others, and then, contributors is only 3%, and then they did burn I think it was like 10 million of the token early on. And you'll see that this is how, blockchains work and decentralized networks work, is in order to incentivize people to go buy mining equipment, okay, which costs tens of thousands of dollars, and they cost a lot of electricity, and you got to have industrial warehouses with industrial electrical, right? In order to incentivize people to invest millions and millions of dollars in the infrastructure to decentralize the network, what they do is they run all the transactions through the miners. So the miners verify and validate the transactions, which are just supercomputers, okay? And all of those transactions run through the miners. And in order for the miners to allow the network to be efficient and secure, they reward the miners with a KDA coin. So that's why 70% of it is going towards the miners, because if there wasn't any miners mining for KDA and keeping the Kadena network secure, there wouldn't be a possibility that the Kadena blockchain would function. Very similar to Bitcoin. So what happens is it's highly inflationary at the start of it, okay? You can see a huge uptick in the amount of tokens released at the beginning. And then it starts to level off over time because you've already created a big incentive for people to start mining and securing the network. Then as more and more people mine, typically the coin goes up in value, and you don't need to release as many coins in the future. So it's very normal for it to release and be really highly inflationary. It's the same thing with Bitcoin, okay? Bitcoin released, it was highly inflationary, and now it's disinflationary with a halving cycle. So it cuts its supply in half every 4 years, okay? So they actually made some updates to the Kadena economic model, which they release about so right now at the mining launch in 2019, they released 2 million tokens a month. Today, it's not today, January 21st, 1.94 million tokens released a month. And then in 5 years, so in January of 2025, it'll be 1.69 million tokens released per month. Now they made an update, which is right here. Okay, the platform emission goes to multiple different things. You'll see the mining emission rate is 23%. Okay, and then the total emissions, the mining plus the platform, because those are the two ways that the coin inflates. And with the old Genesis, before the update was 72%, now it is 46%. Okay, so they actually reduced the total emissions to the platform, which is from the, goes to the Genesis block, which really goes to expanding the Kadena ecosystem and upgrades to Kadena to pay for the project to be developed. So that's what it's really used. The platform shares a total 200 million. This represents all the coins that'll be emitted as subscribed. Note the 3.7 million was already released January 2021. Remaining missions are for 196 million over the next 9 years. So the platform will continue to get paid over the next 9 years. And what it's used for is it's used to upgrade and allow the ecosystem to grow. Okay. And then the lion's share is going to the miners. So 700 million of the tokens are actually going to people that secure the network and allow it to operate really efficiently. So realize that Kadena and the KDA coin, only 18% of the supply has been released, 184 million tokens, and the max supply is 1 billion. And realize that this supply will be released over a long period of time. Okay, this is not a short thing. This is over, and like I said, they burned 100 or 10 million at the launch, but realize that the rest of this will be released over the next 100 years. So this is not a short-term thing, but at the beginning, it's really important to incentivize people earlier stages. But then as it grows and grows, you'll see the mining emissions slow down, and then it'll eventually be totally released over the next 100 years. Okay. And now this is, can be bad for investors. One of the things that I look for when I'm actually buying a token or a coin during, especially a bear market, is if you're just looking for appreciation, if there's not an income component to the coin, it's pretty important to invest into deflationary, coins, because you actually want the supply decreasing, because that'll allow the coin to at least either hedge against the price going down, or to, ultimately for the price to go up, because if supply keeps shrinking and demand is staying relatively the same, the token price will go up. Okay. But in KDA's point of view, there's a lot of emissions. It's 40% inflation, because we're at a very early stage in the mining and token release in order to secure the network and to grow the ecosystem. But how you take advantage of that is you actually can start to mine for the cryptocurrency. So this is one of my accounts. I create multiple accounts because of KuCoin's verification policy and withdrawal limits. But you'll see every single day this account's getting deposited 22 KDA, 22, 24, 22, 24, 26, 23, 23, 24 KDA. Okay. So we mine the KDA coin. We only mine 2 coins, but we've created a program where we generate different types of passive income in cryptocurrency, which is done through proof of stake blockchains and proof of work blockchains. And KDA is actually my coin that I believe in the most, that I mine the most. I also mine Bitcoin. And if you have a desire to start mining the KDA coin, but don't have an industrial warehouse and industrial technology and a place to plug it in and a place to secure the network, and don't have the time to do all those things, we actually run the machines for you. All you do is you pay a small hosting fee and you can run the machines. We actually source the machines for you. We do pretty much everything for you. Okay. And you become a part of a community. So if you want some more information about mining KDA, there is a link in the description of this video. Now let's talk about some cons of, KDA and Kadena. All right. So the ecosystem is still very small and low adoption, which I'm going to show you here in a second, which isn't super exciting. I want to see this adoption rate pick up here pretty soon. And the reason is because the lack of marketing and the ecosystem growth employees. So they haven't really invested much into employees. If you actually go look at their employees, let's see if we can see them. Look at all these employees. They're all operations, business development, but primarily they're engineers, which is good. It can be good, okay? But it's also important to have some marketing employees. But I would rather see this. I'd rather see them focus on the development of the project to make it an actual valuable project, instead of like most coins. They just do all marketing, little develop, and then they have like all this money going to the coin, and then there's really no utility and value behind it. Kadena is the exact opposite, but I do believe they need to start putting more time and energy into actually marketing the project, because a lot of people don't even know about what even Kadena is. Okay, so that they do have a lack of marketing, and they do need to invest into resources and employees in that department. Okay, it's also highly inflationary right now, which does not incentivize secondary market participants. So if you see that the coin is inflating at the rate that KDA is currently, and we're in a bear market, there's not a huge incentive for you to go, put a ton of money into the coin, because it's inflating so much from the miners and from the Genesis block, which is developing the project. Okay, but ultimately, if you believe in it, you might as well practice somewhat of a dollar cost average strategy. I still buy the coin. I still mine the coin. Obviously, I believe in it. But again, looking from just an investor standpoint, if I look at how inflationary it is, maybe now isn't the best time to start putting a ton of money into it. Okay, and then also getting developers to switch over to Pact from Solidity and other smart contract coding and language. I think it might be a little bit difficult to get people to say, oh, actually forget everything that I've previously developed on, and no, let me switch over to this new language, even though it is faster, quicker, easier, and probably better than any other language. I think there's still going to be a little bit of a hurdle getting over to get people to go to Pact. And let me show you the Kadena's ecosystem, which it's really not that big right now. You can see in DeFi, we got 4 projects, NFT collections. I think we've got like 8 or 10. Okay, the marketplace, we've got 3, gaming, we've got 2 games, launch pads, 3, and then we've got a few wallets, 4 different wallets. I think it's actually a little bit higher than that. I think there's like 5 or 6 wallets now. And then, different tokens listed on the chain, and then, something random that I don't even know what this is. Okay. So, yeah, the ecosystem is quite small right now, which is not to be, it's honestly should not surprise you because they've put pretty much 0 time into people, brand awareness and marketing. Okay. But what I'd have liked to see is that they did release a 100 million grant program for Web3 builders. So they have released $100 million in order to incentivize people to come develop on the ecosystem in order to expand gaming, metaverse, NFTs, Web3, DeFi, and DAO projects. So they are doing the right things by incentivizing people, by giving them grants to come up over and to develop into the Kadena blockchain. But again, they still have pretty low adoption, and I'm hoping that this does spur some interest on that front. And this article at least was released in April of 2022. Okay, so some pros, obviously they have a highly skilled team. They're focused on building a great product. Pact software is easily readable and programmable, which I think is really important. I would not be surprised if in the future, all of us collectively, just regular humans they don't have a ton of software engineering experience, can get on their phones and literally write a smart contract and write a different, application to do whatever they want to do in the future in a decentralized economy. I really think that's going to be a huge thing where you can just write code very easily, maybe on Pact, on Kadena's blockchain, right on your mobile device, and create whatever application that you want. I think that's where the world is moving, to be honest. Okay, technology is unmatched. The amount of security and scalability, and the 20 braided chains that can scale to 50,000 chains is ridiculous. I don't think there's anything that really competes, to be honest. No massive pre-sale, so I thought that was important. There wasn't like a huge token allocation where one party has a ridiculous amount of the token supply. Okay, because that if you look at Dogecoin, 40% of Dogecoin is held in the top 5 wallets. That's not very exciting because if one of them wants to dump, then that just kills price. Okay, long-term tokenomics seem pretty logical as it scales over the next 100 years and incentivize the most important participants in the Kadena ecosystem, which is ultimately miners and the development of the project. The team does not have the lion's share of the tokens. You saw, I think under 10% of it was going to the team, which I think is important. Some of these projects, that's how you create rug pulls, is the team gets a ton of the tokens, and then the price goes way up, they pull all their tokens out, and then the price collapses. You don't want to see the team, in my opinion, having more than 20% of the tokens. And in this case, Kadena team has less than 10%. Okay, starting to make a push towards the ecosystem and development, like I just showed you, and then endless future use cases due to the blockchain scalability and security. Okay, I do believe that blockchain is just an open source accounting book that stores records and transactions. The amount of data that I believe is going to be stored on blockchains is going to be tremendous. And I do think that we are moving towards a decentralized economy. And like I mentioned, I think, developing different applications in the matter of a few minutes on top of these different open source public blockchains is going to be really, really massive in the future. And I think Kadena is really set up in a really great place to capitalize on that move into the Web3 world. All right. Anyways, if you got value from this video, I'd greatly appreciate you hitting the like button. If you get consistent value from my channel, why not hit subscribe and share this with another person that maybe doesn't know what Kadena is, maybe wants to start mining the KDA coin. I'm going to share a lot more information on mining and the different miners and how profitable they are and all that stuff. But if you have any more information or want me to cover anything about Kadena and the coin KDA, let me know below this video. Thanks so much for watching, and I hope to see you here on this next video.